Payroll isn't just about paying employees. That's a big part, of course. But another important aspect of payroll is recording the payroll expenses and liabilities in the general journal and posting the entries to the general ledger. In addition, the general ledger accountant is typically responsible for providing payroll general ledger reconciliations to the external auditors and answering any questions the auditors have about the payroll, bonuses, severance, and the related payments. That is why it's so important that as an accountant, you understand how to record the journal entries and be able to tie out the general ledger accounts to the year-end payroll register summaries and be able to explain any timing variances to your external auditors. Recording payroll journal entries involves two separate entries, one to record the payroll expense from the payroll register and another entry to record the cash payments to the employees. The general journal entry to record the payroll expense is based on the payroll register and involves the following three steps. Gross pay is debited to wages and salaries. Typically, there are separate general ledger accounts for different types of wages. In our textbook, the gross pay is debited to shipping wages expense for the shipping clerks and supervisor, and to office salaries expense for the office clerk. Each type of deduction is credited to a separate liability account: Social Security tax payable, Medicare tax payable, employee income tax payable, and health insurance premiums payable. There could be additional liability accounts that are credited, such as 401k and dental and vision premiums payable, as well as union dues and donations payable. Basically, we're recording everything withheld from the employee's check as a liability because it will be paid later to the government agencies and other payers. The third step is that the net pay is credited to the liability accounts, salaries, and wages payable. It will then be paid to the employees. Let's look at our textbook example. Typically, the general ledger account would not see the details of the employee information. Instead, you would receive a summary report that only shows the payroll categories like regular pay, overtime, bonuses, commissions, and the total amounts. That said, in many small businesses, the accountant or bookkeeper also handles the payroll. I've worked for several small and medium-sized businesses where the same person handled both functions. However, it is ideal when those two functions are separate. Our starting point is the payroll register for the first week of January. It starts with the name of the employee, allowances and their marital status. Next are the number of hours and the hourly rate and the calculation of regular and overtime wages. The payroll register then continues with the taxable wages for Social Security and Medicare taxes. And typically there would also be a column for federal and state taxable wages. In our example here, all of the taxable wages are the same. However, when the employee has pre-tax deductions, the amounts subject to federal, Social Security, and Medicare tax would be different from the gross wages. The next set of columns are the deductions for Social Security, Medicare, income taxes, as well as health insurance. Finally, we get to the net pay, the check number, and the distribution of the wages by type. In this case, office salaries and shipping wages. So let's record the first part of our payroll journal entry, the gross wages. I've summarized the information from the payroll register that we need for the payroll journal entries. It's a good practice to check first that the gross wages minus the deductions actually equal the net amount. It's common for payroll to include amounts for taxable fringe benefits that can throw off your entire journal entry. So you can see that I have double-checked the math for this payroll register And the gross wages minus deductions equal the net pay of $1,840.56. The gross wages for this week's payroll are $2,247.50, and SB Express splits the gross wages between office salaries of $480 and shipping wages of $1,767.50. We enter the date in the date column and the account name into the description column. We first enter office salaries expense in the description column and the amount of $480 into the debit column. On the next line, we enter shipping wages expense in the description column and $1,767.50 into the debit column. Now we're ready to enter the deductions from the payroll register as liabilities, meaning credits on the payroll journal entry. Remember that SB Express's liabilities increased and liabilities increase with credits. We enter the liabilities from the payroll register summary into the journal entry by indenting the third line and writing Social Security tax payable in the description column in the amount of $139.35 in the credit column. On the fourth line, we write Medicare tax payable into the description column in the amount of $32.59 into the credit column. On the fifth line, we write employee income tax payable into the description column in the amount of $155 into the credit column. On the sixth line, we write health insurance premiums payable into the description column in the amount of $80 into the credit column. We can now move on to the last step of our payroll journal entry. The net amount of the payroll register is $1,840.56, and we need that amount to complete our payroll journal entry. We entered the account salaries and wages payable into the description column and the amount of $1,840.56 as a credit. Don't forget to also write a short description about the journal entry indented into the description column. Double check that your journal entry balances, which in this case equals $2,247.50 on both sides. It is very common to have small rounding variances on the payroll register. To record the payment of the wages to the employees, we debit the liability account to which we previously recorded the net pay, salaries and wages payable, and write $1,840.56 into the debit column. We slightly indent on the next line and write cash into the description column and $1,840.56 into the credit column. The next step is to post the journal entries to the general ledger. But please keep in mind that this process is automated in most companies because they use accounting software. To manually post these two payroll entries, we first debit the gross wages to the office salaries expense account for $480 and the shipping wages expense account for $1,767.50. We then credit all liability accounts, the Social Security tax payable account for $139.35, the Medicare tax payable for $32.59, and the employee income tax payable account for $155, and the health insurance premium payable account for $80. We then credit the salaries and wages payable account for $1,840.56. And that completes the posting of the first journal entry. We're now ready to post the second journal entry by debiting the salaries and wages payable account for $1,840.56 and crediting the cash account for the same amount, which completes the recording and posting of the payroll journal entries. Payroll touches nearly every organization, and even if you never process payroll yourself, understanding how payroll is calculated, recorded, and reported will help you record the related journal entries and prepare the account reconciliations. What we've covered in these videos is just the beginning, and more advanced classes include topics such as employee benefits, garnishments, tax reporting, and compliance with a wide range of labor laws. If you'd like to learn more, I encourage you to consider a payroll accounting course where you will gain an even better understanding of one of the most practical and in-demand areas of accounting.